All right, let's talk Airbus. Their latest earnings report just dropped, and wow, on the surface, the numbers look absolutely incredible. But you know how it is, there's always a story behind the story, and in this case, it looks like they're flying into some pretty serious turbulence, even with all these soaring profits. So let's get right into it.
So let's just start with this question. How on earth do you build and deliver over 800 commercial airplanes in a single year? I mean, really think about that for a second. These are massive, incredibly complex machines. It's a staggering logistical feat, right? Well, that's the scale we're talking about when we look at the numbers Airbus just put up.
Get this. For their third quarter, Airbus saw revenues jump a massive 14% year over year. That's almost 18 billion euros. And this wasn't just one thing. It was growth across the board. Commercial planes, helicopters, their whole defense and space division. But here's where it gets really crazy. Their profits. Adjusted profits didn't just grow. They absolutely surged by 38%, hitting nearly 2 billion euros for the quarter. That tells you they're not just selling more stuff, they're getting way more efficient at doing it. And what about getting those planes out the door? Well, they're crushing it. In just the first 9 months of the year, they've already delivered 507 commercial aircraft. So that big target of over 800 for the full year, yeah, that's looking more and more like a sure thing.
So the bottom line is, no matter how you slice it, revenue, profit, deliveries, Airbus is just soaring. They're blowing past expectations and painting this picture of a company that is in an unbelievably strong position.
And this is where things get interesting, because hiding behind all those amazing numbers is a huge challenge, a bottleneck that's threatening to jam up the whole works. And the craziest part, it's happening right there on their own factory floors.
So what is it? Well, they're calling it the missing engine problem. It's this nagging, persistent supply chain headache that's causing big delays and creating a really weird kind of inventory for Airbus. Yeah, they actually have a nickname for these planes in the industry. They call them gliders. And it's exactly what it sounds like. Picture this, a brand new, shiny, multi-million-dollar jet, completely built, sitting there on the tarmac. Perfect in every way except for one tiny detail. It's missing its engines. So it's basically a very, very expensive glider.
And we're not talking about one or two planes here and there. The scale of this is kind of mind-blowing. Airbus is averaging around 60 of these engineless gliders just parked at their facilities every single month. That is a massive amount of cash and product just sitting there, waiting.
And look, you don't have to take my word for it. The CEO of Airbus himself, Guillaume Faury, has basically pointed the finger. He said that engine manufacturers are the #1 reason they're struggling with on-time deliveries. So this isn't some small hiccup, right? This is a major operational problem coming from their most critical suppliers.
So, if you're Airbus, what do you do when a key part of your supply chain is holding you back? Well, you take control, and that's exactly what they're doing, making a huge strategic move to fix this problem for good.
It's really a smart three-step play. First, they spotted the weak link. A huge supplier, Spirit AeroSystems, was in some financial trouble, which put their parts delivery at risk. So, step 2, Airbus moved to buy the most important parts of Spirit, the factories that built things like fuselages and wings. And the final step, step 3, is to bring all that manufacturing in-house. That way, they can control and stabilize production for their most important planes.
Okay, so with all this internal drama, you'd probably think Airbus is losing ground to its biggest rival, Boeing, right? Well, when you actually zoom out and look at the big picture, a completely different story pops out.
Just look at this. This is the backlog, the number of planes that have been ordered but not built yet. Airbus is sitting on orders for over 8,700 aircraft. That's more than 2,000 planes ahead of Boeing. You know what that is? At the speed they're building now, that is over a decade of guaranteed work. It's an absolutely massive lead.
This little scoreboard here just makes it crystal clear. So far this year, Airbus has about 60% of the market share. Their A320neo family is just dominating its category. And like we just saw, that backlog is way, way bigger. In this head-to-head race, there's no question. Airbus is way out in front. So, you've got this dominant market position, but these nagging supply chain issues, what does the future look like? Well, let's take a peek at Airbus's official flight path for ramping up production over the next few years.
They've laid out some seriously ambitious goals. I mean, they're aiming to churn out 75 of their super popular A320 jets every single month by 2027. And they're not stopping there, they're scaling up everything. The A220, the A350, the A30. This isn't just about getting back to normal. This is about full-throttle, aggressive growth.
And here's the real kicker. Even with all the headaches we've been talking about, management is doubling down on its promises to investors for the full year. They're still saying they'll deliver around 820 planes, hit 7 billion euros in profit, and generate a massive 4.5 billion in cash. That shows you just how confident they are that they can navigate all this turbulence.
Which, of course, brings us to the big question at the end of all this. Airbus is flying high on profits, they've got a gigantic order book, and they have a clear plan to fix their supply chain. But can they actually pull it all off? Can they execute that plan perfectly and land all of those ambitious promises on time? Well, we're definitely going to be watching.